Hi everyone, it's 18th of July 2022. I'm here again with John Adams to discuss global economics. How are you, John?
I'm doing well, Sonia. How are you going?
Yeah, good, going really well. The last time we talked about what is money, the history of money, how we got into today. And I want to talk about what's happening today. Every nation seems to be in the same situation. They're trying to stop QE, they're trying to get inflation under control. And I want to know specifically about what happened to Sri Lanka. Why couldn't they get that under control? And what's going to happen to them
Sure.
now?
Sure. Okay. I mean, if we take a global sort of a helicopter view, we have the biggest debt bubble in the history of humanity, and every country around the world is drowning in debt. Now, depending on which country you look at, that debt may be situated in a whole bunch of different sectors. It may be the government that's drowning in debt, like Japan. It may be the household sector, like Australia. It could be the corporate sector, say, like the United States. In the case of Sri Lanka, they had a huge foreign debt problem. Some countries have borrowed all this debt from other countries like Australia, Sri Lanka, etc. Some people have borrowed this debt internally, like Japan. So Japan is a creditor nation. They're a net lender to the world. They don't have a foreign debt problem, but they still have an internal debt problem in terms of the amount of yen they've printed by the Bank of Japan, and that's gone into government bonds. What happened in Sri Lanka was that basically the international credit markets pre-COVID downgraded the Sri Lankan economy, but also the debt instruments they had, the government, etc., and said, we don't think you are credit worthy. Then when they went through the pandemic, the Sri Lankan economy really struggled to generate foreign exchange reserves. So when you have foreign debt, you've got to be able to pay that debt back, but not in your own currency, but in foreign currency. So depending on who you've borrowed from. So if you borrowed from the US, you've got to have US dollars. If you borrowed from China, you've got to have yuan, et cetera, et cetera. So two really big factors that led them to struggle to generate foreign exchange reserves during the pandemic. The first one was that tourism had collapsed because obviously no one was traveling in 2020, 2021. And the second factor was that the government banned petroleum-based fertilizers. Now, there's a couple of different theories as to why they did so, but the net effect of that was that food production in Sri Lanka collapsed by about 50%. Say, if we think about rice, and so their agricultural exports declined heavily. And again, they weren't able to generate foreign exchange. So if Sri Lanka is selling rice to, say, China, they're going to be selling it in the Chinese currency, and they'll be able to get Chinese yuan that they can then use to go pay back the debts to China. And so now, separate to that, we've had raging inflation across the world because of all of this huge money printing that's happened over the last couple of years. And the Sri Lankan exchange rate was, they had a fixed exchange rate. Now, coming into 2022, Sri Lanka owed about, and they still owe about $7 billion. In US dollar terms, their foreign debt is about 52 billion. They owe $7 billion this year. As of April, they only had about, I think, $1.7 billion worth of foreign exchange reserves. And they had a fixed exchange rate at the beginning of the year, and they were running out of money they're running out of the foreign exchange reserves to keep the peg. So on the 9th of March, they decided to free the exchange rate and allow the market to determine the value of the Sri Lankan currency. At that point, that's when the currency collapsed by 70%. And once the currency collapsed, and the market basically told the Sri Lankan government and the economy, we don't trust the value of your rupee, the Sri Lankan rupee. What happened from there was that inflation started to really take off. So inflation was around 15% around March. As of June, in terms of June, now it's 54%. and the 54% across the economy, and inflation for food, that's around 80%. So when you have foreign creditors saying, I don't trust the value of your currency, you have two choices. You either give it value by shrinking the amount of currency that's available by raising interest rates. And generally, just to give an example, in 2018, when inflation in Argentina was at 28.5%, they wanted to stabilize the value of the peso, so they raised interest rates to 60%. So you need to get interest rates above the rate of inflation, and by a large degree, Sri Lanka wasn't willing to do so, to raise interest rates quite heavily to stabilize the currency, and that's why they have now runaway inflation. But also in terms of, on top of that, in April they suspended payments of their foreign debt. So they just said, we're going to take a pause of paying these scheduled repayments, and then in May they officially defaulted on the debt. And so once they've defaulted on the debt, and they've got these bad credit ratings, they can't go and renegotiate the debt. The IMF had offered to give them a package. They didn't want to take the IMF package because I strongly suspect that the Sri Lankan government didn't want to accept the strings and conditions attached to taking money from the IMF. And so that's basically what's happened. They've defaulted on the foreign debt. The Sri Lankan currency has collapsed. They don't have enough money to buy food, fuel, and medicine from overseas. And the Sri Lankan people are basically, their living standards has gone through the floor. Loss of confidence in the political decision making of the Sri Lankan central bank and the government. And so that's why 2 weekends ago, the Sri Lankan people had enough, and they stormed the presidential palace. They overthrew the prime minister. They raided the central bank, and now you've got full-on chaos in terms of Sri Lanka, and obviously the government has now resigned, and so now the IMF is attempting to step in, but you've got to now do a couple of things. One is you've got to install a government that the people have confidence in, that's going to be clean, not corrupt, and it's actually going to make the best decisions that is in the welfare of the Sri Lankan people. But then you've got to get this, you've got to restructure this debt. You've got to reform the Sri Lankan economy and the value of its currency, so that international creditors have confidence that if they lend money to Sri Lanka in the future, they'll be able to pay it back in currency that the foreign creditors will value in the time schedule that the foreign creditors set. So there's a big challenge for policymakers in Sri Lanka. But yeah, it's a very diabolical situation when you go from an economy with some problems to a full-on collapse and political chaos and revolution. But that's what's happened in Sri Lanka. And unfortunately, in the case of Australia, our net foreign debt to GDP is above 50%, which is where some of the experts say it is in the danger zone. And so we are a few steps away from going down the Sri Lankan path, but we have all the necessary ingredients for that to happen, and that's why the Daily Mail Australia wrote an article about my analysis with Martin North last week, and policymakers really haven't got on top of trying to fix these issues in terms of Australia. Because I'll just finish on one point before I give it back to you, Sonia, is that a lot of Australians believe that the way we live and the way we've been living for the last few decades is it is an outcome of our economic success, that we are entitled because we work hard to live the way we live. Unfortunately, the lifestyle that most Australians have been living has been based on the international credit card. So we've been racking up huge amounts of debt. So in gross terms, we owe the world 2.5 trillion. In net terms, we owe the world 1.2 trillion in terms of our foreign debt, 50% of GDP. And people think that, that the way we live is just the way Australians live. No, the way we live is because we've been borrowing the money to finance a lifestyle that we don't actually deserve. And if it comes to the point that our foreign creditors lose confidence in our ability to repay the debt, it's not that hard to see mathematically, but also economically, how we go from a stable country as we are today in Australia to absolute chaos and revolution like it is in Sri Lanka.
Okay, so do you think the strengthening of the US dollar is adding to the stress of the global economy? Do you think that's one of the reasons Sri Lanka, because the amount like to pay back the debt is increasingly harder to do because the US dollar is strengthening?
Absolutely.
Right.
Yeah. So obviously the interest rate policy in the United States with the US Federal Reserve, as well as the value of the US dollar surging compared to all sorts of other currencies, that definitely has put pressure on in terms of other currencies, other central banks. Just to give you one example, Singapore, their central bank is called the Singapore Monetary Authority. That the way they do things is quite different to most central banks. They don't target interest rates. They actually target the exchange rate. So they want to fix the exchange rate, the value of that compared to the US dollar, and then allow interest rates to move freely so that the exchange rate can remain relatively stable. So last week they basically said we're going to increase the Singaporean dollar has been falling because the US dollar has been rising, and so they said, well, we're going to revalue the Singaporean dollar, and that basically means that domestic interest rates will have to go up, and so they did that, and that was a surprise to the market. But even the case of Australia, part of what I think there is actually going on here is not only are they raising rates because we have a domestic inflation problem, but that they need to ensure that the Australian dollar doesn't fall too low compared to the US dollar. So last year the exchange rate was at about 75, 76 one Australian dollar would get 75 to 76 US cents, and now we're about 67. And so because Canada last week went to 2.5%, the interest rate. New Zealand's at 2.5%. Next week, America's going to go from 1.75 to 2.5%, and we're only at 1.35%. So because we are so far behind, and this is not good for the value of the dollar in terms of the Australian dollar, this is why Deutsche Bank last week came out and suggested that they believe that on the 2nd of August, rather than a 0.5% increase by the RBA, it could be a 0.75% increase because we are way behind. So absolutely, the surging US dollar is having huge problems for those countries that have foreign debt in dollars, because, like I say, it takes more dollars to pay back that debt. And so for most central banks and most economies, they have to raise interest rates to keep their exchange rate relatively stable, because when you don't, that's when you see those problems like you do in Sri Lanka.
Okay, so how, if you were the head of Reserve Bank, what would you do to try and stop a Sri Lanka moment? Because that sounds devastating.
Well, yes. So there's a whole host of things that we have to do in Australia to reverse our foreign debt problems. So ultimately, what we need to be able to do is we need to generate more income. We need to save that income. We need to reduce our willingness or our appetite in terms of debt. And so there's a whole host of changes around raising interest rates, popping the debt bubble, going through a recession, reforming the tax code that provide an incentive to work, but also an incentive to save, cutting welfare, trying to do things on the supply side of the economy, whether it's around industrial relations in terms of energy, because what we need to be able to do, we need to compete. Our basic economic challenge is we need to be able to produce goods and services that the world wants at prices they're willing to pay. And what most federal politicians have not been able to communicate is that in some cases we do produce goods and services that people want to pay in terms of raw materials because they can't get it from anywhere else. But
Yeah.
particularly when it comes to manufacturing, we have an inability to produce products at a price that people are willing to pay. Because if we produce them, given our industrial relations laws and our energy policy, the prices are too high. And so no one has been able to convince the Australian people. And to be honest, in the last 20, 30 years, I've never, like, I mean, ever since I sort of turned 18 and I became awake to Australian politics, I haven't sort of seen any politician make the case that we effectively have priced ourselves out of the international market because our products are too expensive. And so I'm not saying that we work for slave labor wages or anything like that, but we need to be conscious that if we're going to drive our exports, particularly in manufacturing, we're competing against people in Asia who work longer hours, they work for less money, they work harder, and we just have to be able to compete if we're going to, in terms of getting the sales. I mean, look, it's no different whether you're running a coffee shop or some sort of retail shop and you want to get sales, or if you're running a national country and an economy and you need to sell products overseas. You need to get the customers willing to pay, are the customers willing to buy, and unfortunately in the sectors that we need to grow so that we become a more flourishing economy where we can generate high incomes from high value products and services. We haven't come to the table of producing those goods and services at the right price point.
Yes, I agree. Now, I just want to change track now. What worries me is we have the petrodollar, which is the US dollar, and they've always had dominance over the global markets.
Mm-hmm.
Now, Russia has gone gold back with their currency, and the BRIC nations are starting to come together and trade in their own currencies, trying to exclude the US dollar, because the US do use the US dollar as a tool to control nations with the SWIFT program and all that.
Mm-hmm. Mm-hmm.
So what are the consequences of this happening, with Russia going gold back, with the US losing their dominance? Is there going to be any sort of repercussions, or is it?
Sure, yes. So since look, I'll make a couple of points. The first one is, since 1944, the world has been based on a US dollar standard. Now, between 1944 and 1971, the US dollar was backed by gold. And so we were effectively on a gold standard, but the proxy for gold was the US dollar. Now, in 1971, Richard Nixon closed the gold convertibility window, so he basically cut the linkage between gold and silver, so gold and the US dollar, and he did that because the Americans were running out of gold because of the big welfare programs in the 1960s, but also because of the Vietnam War and how much they were spending in terms of that war, in terms of the additional federal deficit that they were running in the 1960s under Lyndon Johnson. So since 1971, we've had this fiat currency standard called the US dollar. Now, since the mid-70s, you are correct, we've had the petrodollar. So the Americans and the Saudis came to a deal that the Saudis would sell the oil in US dollars. That would keep the demand for these dollars up. And in exchange, the Americans would provide security for the Saudi royal family. And that's been obviously in train for quite a while. We've seen over the last few years attempts by various countries to come up with some sort of rival currency to the petrodollar system. In those situations that in typical fashion ended up in some sort of invasion war by the Americans. So Iraq now, in terms of Saddam Hussein, everyone said weapons of mass destruction. In the couple of years prior to the invasion of Iraq in 2002, 2003, Saddam Hussein was talking about selling Iraqi oil in euros.
Yeah.
We had Libya that wanted to create the African dinar backed by gold in Africa to have an African currency, where the Libyans would sell the oil in something other than the US dollars. And obviously, Gaddafi got overthrown. Same sort of thing in terms of Venezuela. And so, for some of these smaller countries, America has been able to use its military might to keep the system in check. Obviously, I mean, in terms of these BRICS countries, so it's not just Russia, but it's Russia, China, Brazil, India, South Africa, and that obviously that provides a formidable a formidable block of countries that the Americans can't defeat militarily. So in terms of Russia, now Russia did. So in late February, when the invasion of the Ukraine started, the Russian ruble did fall aggressively. There was a short amount of time during that period where they did link it to gold in terms of the Russian central bank, but that was only a temporary feature. Since then, what they have been using is their leverage with Europe in terms of gas and oil, and basically said, if you want to buy our natural resources, you've got to buy in Russian ruble. So that's one of the big reasons why the ruble has remained strong in terms of the moment. And obviously, because they have Russia has a lot of gold reserves, but also silver reserves. Funny enough, I mean that's why the Russian ruble has been able to maintain its value during this whole war process. So now, in terms of the long-term future, so I do say that at some point, I think the US dollar will lose its in terms of its reserve currency status. I mean, there's been warnings by Western central bank leaders along those lines. So it's not just the rival countries saying that; even the Western countries are also saying that it's time to move on from the US dollar. Like you say, the Americans have mismanaged their military power, that they've sanctioned countries and sort of stopped people from accessing their money through the SWIFT system. And that's obviously upset quite a few countries and say, well, why do we need to use your system when you're basically blocking off our money because you don't like our politics? And so, yes, so now the world, I think, will have to come to some sort of international agreement, just like how the world came to an agreement in 1944, as to how will international trade and investment flows be settled? Will it be back? Will it go back to gold? Will it be, will it be a new currency, a basket of currencies? Will it be the IMF special drawing rights, the SDR? Will it be a crypto? Lots of potential options out there. But I think the BRICS countries are going to basically force a change in the system at some point. Now, what that change will look like, I mean, there's a lot of theories and hypotheses, but we won't really know until the major powers sit down at the negotiating table and work out what that new agreement is going to look like. So I think the BRICS country is going to force a change on the international monetary system, but what's the end product? There's a lot of theories, there's a lot of conspiracy theories out there, but what's the end outcome? It's just hard to be precise at the moment.
But the US won't give it up like willingly, you wouldn't think.
Well, the thing is that so obviously when you look at some of these smaller countries like Iraq, Libya, Venezuela, the Americans had the ability to flex their muscles and stop those countries from doing anything that would upset the petro in terms of the petrodollar system. Now, one of the issues that's been speculating in the press the last couple of months is whether actually Saudi Arabia is going to switch camps. So now there's been some analysis by some economists and financial experts on YouTube that I've listened to over the last couple of years that suggested that the Saudis have actually been selling oil to the Chinese in yuan and have been basically bypassing the US dollar. We know that Iran has been selling their oil to the Chinese in yuan as well. So we're already seeing this. We're already seeing some countries switch camps. but because you've got these major powers, particularly India, Russia, China, which has pretty much almost half the world's population, America can't, I mean, America doesn't have conventional military weapons to fight that. And even if they said we're going to launch a nuclear war, the Russians and the Chinese have enough nuclear weapons that could destroy America. So the BRICS country represents an existential threat to the US dollar that their previous attempts haven't been able to pose. So even if the Americans say we don't want this to happen, I think this BRICS bloc is so powerful both economically and militarily that the Americans have no choice but to surrender. Now, if they wanted to. Now, if you had a new American government, if you had cleaning up of all the corruption, if you raised rates, had a global financial crisis, if you shrank the amount of US dollars out there, if they did things like back up by gold, could the US dollar regain the world's confidence and continue the life of the dollar for the next 1, 2, 3 decades? In theory, it's possible, but the Americans would have to go through a huge reform program to re-establish trust and confidence with these BRICS countries, that they can say, well, yes, we had some corrupt presidents in the last 20 years. We're moving forward. We're gonna stabilize the dollar. We're not gonna print like crazy, and we're gonna have a clean, corruption-free government in Washington, and you can trust us again. So ideally, that would be a good outcome for America and the world. Am I going to see that in my lifetime? I think, truth be told, I think America is so corrupt that fixing corruption in Washington, I mean, look, I don't think it's going to happen anytime soon.
Yes, I watched a geopolitical expert, and he was saying not war this time. He's saying that the Federal Reserve might aggressively increase interest rates, and knowing that these countries will break before the US. So that's what he was saying, as I think.
Well, yes. So the only thing I was saying is that now a couple of things. If they do raise interest rates aggressively, now you can do this for geopolitical strategic reasons, but you also have a domestic economic situation you've got to consider. U.S. households owe $16 trillion worth of debt, and that's more debt compared to 2008 in nominal terms. So the U.S. economy is already in recession, so business investment in America has fallen off a cliff. So we had the first quarter at negative 1.6% growth, and then in the second quarter it's estimated to be another negative 1.5%. So they're already in recession. Now, if they continue to raise rates, what's going to happen is not only are you going to crash the economy, but you're going to have a financial crisis. So there's going to be some institution in the banking system that's going to default, and you're going to have the biggest depression in the history of the United States. So that's one of the consequences in terms of domestic political consideration that the U.S. Federal Reserve would have to consider. Now, if they're willing to make that happen in order to defeat the BRICS countries, I mean that's possibly something that they could consider. The other thing that they have to consider is that as they raise rates, some of these BRICS countries have attempted to reduce their reliance in terms of the US dollar. So for example, in terms of Russia used to hold US treasuries. They dumped all those treasuries. They've tried to wean their dependence off US dollars. I know that the Chinese and some of the other countries have attempted to be able to do so. So in years gone past, because these countries were holding US dollars, particularly in say Russia was holding US dollars, they had access to the SWIFT system. Well, now that they've been cut off the SWIFT system, they basically dumped dollars, and now they're dealing with other countries outside of the United States. So the question is that if these, if there's, it depends on how reliant these foreign countries are on the US dollar, what sort of obligations do they have in US dollars, and what leverage does does the United States have over the countries. I mean, Russia and China have been strategically moving themselves away from that type of reliance, so they could have more foreign policy independence. And so I have no doubt that some of the smaller countries, particularly in the developing world, will break. Just like Sri Lanka has broken, and not only Sri Lanka, even in the last couple of years, Lebanon, for example, had huge amounts of debt, and the Americans and the Europeans basically pulled their money out of Lebanon, and the Lebanese pound collapsed. They had hyperinflation in terms of Lebanon. So some countries will break, but will the major powers break if they drive interest rates too high? I don't think that's going to happen, but obviously, we'll wait and see what happens.
Yes. Now I want to divert down to gold and silver, because I never understood it, and I follow you on Twitter, and you convinced me that it's a good idea to have hard assets in your possession, not paper gold and silver.
Yes.
So tell the audience what you mean by that, like hard asset.
Sure.
And to have physical gold and silver.
Sure. Yeah. So throughout humanity, people have used different things in order to exchange goods and services. So pre-civilization, we had barter, for example, like the barter system. So we would swap goods and services. So you may have an apple, I may have a banana. I want your apple, you're happy to accept my banana, we would exchange them, and we'd get what we want. Then people realize, well, maybe I don't want all of the banana, I want half a banana or a third of a banana, but it's too clumsy and too cumbersome to cut bananas up and keep them fresh and trade them and all that. So they said, well, we need some type of money. So people have used seashells, people have used tobacco, people have used iron, copper, all sorts of different commodities to represent money so that transactions can happen. Now, what we know that has been the best type of use of money for the last 5,000 years across all civilizations on Earth. So this is not a Western thing or an Asian thing or an African thing or a Middle Eastern thing. What we know that has worked is gold and silver. So gold and silver has been the best form of money, the most used type of money. Silver actually technically more so than gold. And these types of money have certain principles and certain properties that make them good in terms of that are able to make them good forms of money. But more importantly, they've been able to hold their value. Now, in terms of fiat currency, so basically a currency, for example, a paper currency that derives its value because the government says it is worth something. Even last week, talking to my daughter, I was talking to her and saying, so a $10 note in Australia and a $5 note, they're effectively two pieces of plastic with different color ink on them. One says 10, the other one says 5. So I was saying to my daughter, why does the $10 note have more value than the $5 note when they're effectively just two pieces of plastic? And obviously she's only 8, so this is very sort of new concept to her. But the reason why is because the government says a piece of plastic with blue ink and the number 10 can buy you more goods and services compared to a pink piece of plastic with a 5 on it. And so now every time we've had this type of fiat currency system, and in the last 1,000 years that we've had multiple examples right across the world, what ultimately happens is bureaucrats and governments print too much or create too much of this type of currency, and it loses its value to the point where the value of the currency goes to zero, and you have hyperinflation. And so, but whereas with gold and silver, because it is so hard to obtain, because it is hard to actually mine it out of the ground, and because everyone values gold and silver as these metals being precious, that's why gold and silver, is seen as money. So if you're holding physical gold, physical silver, don't think of it as an investment. Think of it as you're holding money. It's an alternative. It's a substitute to the Australian dollar. So you can save in Australian dollars. So if you've got $100,000 in the bank, well, that's how most people understand that they're saving money. but actually what you're doing is you're saving currency, but you have the alternative of saving in gold, physical silver, and what you know is that over the long term, the value of that gold and silver holds its value compared to these currencies where they create too much of it. And so I mean that's sort of what we're seeing now. Central banks around the world are creating too much currency. We've got too much debt. We've got the biggest debt bubble in the history of humanity. And they're not willing to pop the debt bubble and create a depression and try to restore the value of these currencies. So the only thing that they can do to perpetuate the current system is to keep printing. And by them keep on printing, that's going to degrade the value of the US dollar, the Australian dollar, etc. But what will maintain its value in terms of its purchasing power is gold and silver. So when I came up with, so when I was writing my economic Armageddon thesis for news.com back in 2018, they actually asked me to write a 10-point preparation plan, 10 basic principles. And so one of the principles I came up with was holding good money, holding money that holds its value, so that no matter what the economic conditions are, you actually have money that you can rely on that's actually going to ensure that you are able to buy the commensurate amount of goods and services required for you to live the life that you want to live. And so that's what I have been doing, so that's not the only thing that I recommend. I mean, getting out of debt, good cash flow, multiple sources of income. There's a number of things that I recommend people do. But once you have money and you want to save that money, what is the best type of money that will maintain its value and allow you to maintain your living standards over the medium to long term? Gold and silver has been around for 5,000 years. It's been tested out by multiple societies and multiple cultures, religions across the world, and it still has served humanity in terms of the best. So that's why I've involved myself. Not only have I been buying gold and silver personally in terms of my portfolio, but in terms of working in the industry. I've been working for South Australia's largest bullion dealer since 2018 as the chief economist, and we obviously continue helping Australians get out of the Australian dollar, get out of these fiat currencies, holding money that holds its value, and so that no matter as this ongoing money printing campaign continues, people will still be able to maintain the living standards that they wish to live by.
Great. Just one. I'm just looking at the time, so just one last question. This comes from a viewer. He was asking you specifically, what do you think the stock market will that be good investment compared to precious metals? Like, what do you think? And I know this is not financial advice to anyone because it's just an opinion. What do you think? Will the stock market rally again in the short term, or do you think that it will go down in the short term?
So the only thing that I can sort of say on that is to look at history. So in the 1970s, we had stagflation, which was weak economic growth. At the same time, you've got inflation high. And so during this period of time, because the economy was underperforming, a lot of people around the world weren't confident in putting their money in the stock market, because if you're investing in the stock market, you're buying companies, and if you're investing in companies, the only way their share price goes up in terms of the medium term is they've got to generate more earnings, they've got to generate more profit. So if you're not confident that a company is going to generate more earnings, but you still have this issue of rising prices, well, where do you put your money? And what happened in the 1980s the 1970s was the stock market basically did nothing for the whole decade. So if you look at, say, the Dow or the S&P 500 in the US, it was pretty weak for the decade, whereas there was a huge surge in commodity prices, particularly in terms of gold and silver. So now, since 2008, we've had a huge amount of money printing. A lot of that money has gone into property, has gone into real estate, stock market, cryptocurrencies, but also in terms of bonds. So now we have rising interest rates, the crypto bubble is collapsing, people selling out of shares, people selling out of bonds, people losing value in terms of real estate. So if they pivot, which I expect that they will, if they continue to reprint and inflation stays high, will people go back into the stock market, particularly if economic growth is weak, or will they realize that that they're not going to actually generate the returns that they want with companies not growing their profits, and they need to go into in terms of assets that will maintain its value, like gold, silver, other commodities, mining companies, agricultural companies, etc. So there's a lot of people who think that there'll be a big switch from the share market to commodities, and that will have significant impacts in terms of what will the stock market do. But yeah, so and again, so we're not just talking about retail investors, we're talking about institutional investors across the world. So institutional investors that hold billions of dollars or billions of whatever currency they have on behalf of their clients. A number of these companies and institutions, and in terms of investment funds, they'll have to make these decisions about how to allocate capital. And so yeah, the late 1970s, 1980, in terms of gold and silver, or if you look at the period after the GFC, where they started quantitative easing, a lot of people were pushing a lot of money into precious metals, commodities. I mean, that's why, say in 2011, when gold and silver were peaking, we had a mining boom in Australia. We had the Australian dollar worth $1.10 US. So when commodities are strong, the US dollar goes, so the Australian dollar goes through the roof compared to the American dollar. And so that's how Australians were able to benefit in terms of that sort of in terms of that sector, in terms of that sort of movement of capital. So I think they're the basic concepts that people need to think of is what's the forward earning projections of well, hang on, take a step back. What is the future growth rate of the economy?
Yeah.
How will companies across the economy, whether it's retail, manufacturing, the financial sector, will they be able to generate a lot of growth in profit? If not, and inflation is still high, where do you think people will go to seek protection of their capital? Historically, that's been precious metals, and so there's a lot of expectation that we're going to see money not go back into the stock market when they reinflate. It's going to go into commodities, and that's when gold and silver will be able to shine. But again, that's what history has shown us. That's what a lot of people expect to happen, and we'll obviously see what happens over the next couple of years.
So when do you think they're going to pivot?
Well, I mean, what I think we can say for sure at the moment is, to my mind, Japan, the European Union, and the Bank of England have already surrendered to inflation because they're not putting up a serious fight. So Japan's not raising rates at all. The ECB is raising rates. I mean, they've got interest rates at now negative 0.5%, and you've got inflation at 8.5% in Europe. So they're going to raise rates by only 0.25% this week. And why? Because the debt is so extreme in these southern European countries that if they aggressively raise interest rates to tackle inflation in Europe, Italy would be bankrupt. And if Italy goes bankrupt, good night euro, good night Europe, and they don't want that economic and political catastrophe to occur. So that's why I think the ECB has already surrendered to inflation, even though they're going to do some measly interest rate increase. Now look at the United Kingdom. Inflation's at 9%. The interest rates by the Bank of England is I think last month they raised it from 1% to 1.25%. Again, it's a very measly increase responding to out of control inflation. So it doesn't seem to me that the Bank of England is actually doing anything serious to tackle inflation. So in those three contexts, I say they've already surrendered. Now, in terms of the other countries, in terms of as we go forward, now the Americans are talking tough, but we just saw last week that the yield curve between the 1-year bond and the 10-year bond, it inverted. That's a big telltale sign that the financial markets are in trouble. and it could, like, again, some people think September. I think in the next 4 to 8 weeks, probably around August, you're going to start to see. So the pivot won't necessarily be they're going to cut rates. It's just that either they're going to slow down the increases or they're going to stop raising rates. I think that's going to be the next couple of months. We're going to see some sort of signal to say enough's enough. The financial markets in the debt bubble can't take it anymore. And then once they pause, that's enough for the financial markets to get the signal that they've surrendered to inflation, and that's when you're going to start to see huge readjustments in capital flows. But when will they start to cut rates? Now, there's a lot of talk that these central banks raising rates at the moment, they're going to cut rates in the second half of next year. I personally think it's going to happen sooner than that, but we'll obviously just see how the next few months play out.
Okay, what's your bet for the RBA in August?
So I suspect it'll be 0.5%, even though that that's going to still pose weakness in terms of the Australian dollar. But I think 0.5% probably would be the go. And for a lot of people in Sydney in particular who borrowed $1-2 million to get into the property market, 60% of the market is variable, 40% fixed. A lot of these fixed interest rate mortgages are going to come off in 2023, and we're going to see a lot of pain happening out there, and it will be very interesting to see. So the first thing you're going to see first in terms of Sydney in particular, and Sydney is the most important because they lead the country in terms of the economy, but also in terms of the property market. So it's the first to go up, but it's also the first to go down. So you're going to see a whole host of people start to cut back on consumption, particularly discretionary consumption, things that people don't need. And then you're going to see a lot of tightening of the belt. But then we're already starting to hear an increase of people going to financial counseling services. I've heard various anecdotal stories of the banks increasing their bad debt teams because they're now chasing money. They're trying to handle customers who can't pay their debts. So we're starting to see this manifest in a big way, but obviously it takes time for these interest rates to flow through, number one, but also we haven't seen interest rates go up since 2010, and now it's not just a small increase. We've gone from 0.1 to 1.35 with a potential another 1% on top of that in the next 2 months. These are very big adjustments when you've got a 7-figure mortgage. Now, thankfully for me, I'm debt free, but for these other people, it's going to be a very big deal, and we'll just have to see how it all plays. So I think the RBA is going to go 0.5%, but at some point, they're going to get the message from someone that they're causing too much pain for the Australian economy, for people with these mega mortgages. And it'll be a really interesting question as to, do they keep going? Do they slow down? Do they stop? Do they cut? And they're the factors that the RBA will have to consider. But as I've said in a recent show with Martin North, the RBA doesn't have real-time cash flow data about households. They're flying blind, and so the chances that they miscalculate are pretty high. And so that's why for those that are positioned well, they'll ride out the next 6 months okay. But for those that swallow the propaganda, it's going to be a painful 6 months.
Okay, well, we'll wait and see. Thank you, John.
Thank you very much for your time, Sonia.
And we'll speak soon.
Absolutely. Thank you very much.
Thanks.